everyone, this is Vaishali Siddhappa and welcome to my channel Complemental Economics, and today's topic, nature of business economics. The economic world is extremely complex and completely interdependent among. The decisions what we are going to take, it is completely, the reason will be economics. The economic theories what we are going to read, that is completely hypothetical. You just make a guesswork, this can happen, that can happen. On the basis of that hypothetical stories, we have constructed the economic theories. At the same time, it is very simple to understand also. When it comes to economic models, we need a lot of economic models to understand, to develop business theories, business economics. When it comes to business theory, we have a lot of assumptions. The economic theory what we are going to read, so in that we will be having a lot of assumptions. Assumption is like we'll construct some kind of rules, in that only that situation will be sorted out. In that way, whenever we read economics, we will be having some kind of assumptions, but in real practical life that will be very much different. The economic theory, what actually is, it's full of assumption, and the real economic is completely different. The practically what are the problems we are going to face, and the economic theoretical whatever the assumptions we are coming with, that how our economic theory will be built, that is completely different. The gap what we have between the real economic and the economic theory, the gap is filled by business economics. So let's see what are the points we have to read, what are the nature of business economics. The first one is business economics is a science. Yes, it is. What is the meaning of science? Science is fact, truth, which is provable. Yes, business economics, we even call it as a science because it establishes the cause and effect relationship. What is the cause behind any problem, what is the effect of it, and how we are going to solve that. At the same time, it integrates the decision sciences like mathematics, statistics, econometrics. Econometrics, it is with economic theory only. Econometrics, it is a part of economic theory. So these all sciences comes together to decide what is the business enterprises should be, and how scientifically and empirically, so we are going to adopt this, and how we are going to come with the result. So business economics is not only a common subject, at the same time even it is called as a science because we deal with the truth, fact, cause and effects relationship. The next one what we have, that is based on microeconomics. Business economics maximum, it is dependent on microeconomics because microeconomics what they do is they set few of the predetermined objectives. There will be few having objectives. The complete company's objective is nothing but the fulfilling the microeconomic objective which is already predetermined. So if anybody want to survive for the long term, if they want to gain more and more profit for the organization, in that case, so they have to read microeconomics. Microeconomics gives a complete information about how we have to solve the problems, how you have to take the decision making of each and every individually, every establishment, completely technically how you're going to handle, and each and every individual units will be studied. So for that reason, if you want to understand the business economics, it's completely dependent on microeconomics maximum. The next area which we have to talk about, the next nature, that is incorporates elements of macro analysis also. It is not only dependent on micro, it also dependent on macroeconomics because all businesses are affected by macroeconomic concepts, like it can be about the general price level, and it can be about the employment, everybody's income, and government policies, taxation, interest rates, exchange rate. When you're going to change one country currency to another country currency, that's called exchange rate. Industries, prices, prices we have already discussed. Wages, regulation of monopolies. So these way, so many areas we have when it comes to aggregate. These are going to play a very important role when we're going to decide any individual firm how it should be run. It can be price, employment, government policies, industries, income of the people, interest rate, exchange rate, taxation, industries, wages, monopoly activities. Monopoly means, mono means single, poly means seller. That means any firm created a monopoly, only one person, yeah, one industry is ruling all over the world, yeah, that particular business, that's called monopoly. This way, these all the concepts what we have, that's all the concepts of macroeconomics. These all plays very important role when it comes to any business economics. So definitely macro analysis is really very important. And the next one what we have, that is business economics is also a art. Why it is art? Because we have to understand what are the problems we have in the practical way. In practically, when we are going to use economic theories, in practical you have to understand the practical problems. If you understand the practical problems, only then practical application is possible. So to apply any theory, anything in the economy, so for that what you have to understand is, so how you're going to apply that. So it is the art in which, for the which problem which solution will be suitable, in which environment what are the decisions should be taken, that is completely dependent on art. The fifth one is use of theory of markets and private enterprises. Business economics largely uses the theory of markets and private enterprises. So how exactly the market is, how private enterprises are working, and most importantly how firms and any individual, how they're going to do resource allocation, how they're going to do the resource allocation. So these are the main concepts of use of theory of markets and private enterprises. So definitely business economics studies theory of markets and private enterprises also. The next one here you have pragmatic in approach. When it comes to microeconomics, whenever we establish microeconomics and microeconomics theories, always we go with lot of assumptions. When you have an assumption, the maximum assumptions what we are going to use, that is completely unrealistic. For an example, there is no change in the technology. There is no change in the technology, that is not going to happen. Every time the technology will be changed. So for this analysis, what we are going to take, one of the assumption we are going to consider unrealistic assumptions. So these unrealistic assumptions we are going to read in microeconomics to solve the problem in the macroeconomics, to solve the problem in the business economics. For that unrealistic assumptions and the practical what we are going to apply, that will be very much different. So after reading this unrealistic assumptions, so we always come with a pragmatic approach for the economy. So we study what is needed for the economy. It can be practical problems which the real world is going to face, that will be solved by reading microeconomics unrealistic assumptions. So that's why it says pragmatic approach, even though we read unrealistic assumptions. So that's really helpful to deal the real problems in the economy. So that's why the business economics is pragmatic when it comes to its approach. The next one, interdisciplinary in nature. Interdisciplinary means in this business economics, so we're going to read a lot of other papers, other subjects like mathematics, operations research, management theory, accounting, marketing, finance, statistics, econometrics. So many subjects: mathematics, operation research, management theory, accounting, mathematics, finance, statistics, economics, econometrics. So these are the area which we are going to cover. So that's why we say the business economics is interdisciplinary in nature. And the last point what we have, that is business economics is normative in nature. To understand what is normative, one more topic what you have to understand, that is positive in nature. So you have to understand two different topics here, what is normative, what is positive. So let me talk about positive first. Positive is nothing but it understands, it try to analyze the facts and the figures. It construct the relationship between causes and consequences. What is the problem, why it is established, what is going to happen, each and every real fact will be studied in positive economics. Real things, what is actually happening right now in the society, in the economy, that will be studied through positive economics. So that's why, and at the same time, it never judges, it never passes any value judgment like this is right, this is wrong. The positive economics, it's never going to release any kind of a judgment like this is the right thing you have to do, this is a wrong thing you are not supposed to do. They are not going to tell. It is not a judging one. It never judges any value judgment it does. Positive economics can analyze the facts and figures, causes and consequences. It never judges economy. At the same time, the whatever the real facts what we have, that will be studied by the positive economics. So many times positive economics compared to microeconomics also. On the other side, we have the normative economics. What normative economics is going to do is, normative economics always studies about giving a solution. It always comes with value judgment. How it comes with a value judgment? So many people, they smoke. Smoking is injurious to health. So normative economics passes the judgment, value judgment, which affects the economy and the individual by saying smoking is injurious to health. On the other side, positive economics, it never says this. Positive economics just say in economy, each and everybody, 60% of the population, the 60% of the youth these days, they are smoking. That I am just giving an example, this is not the real fact. 60% of the youth, they are smoking. So the 60% of the youth, what they are smoking, I have given the fact, but I am not passing a judgment whether it is right or wrong. I have just given the information. This is the thing. But normative economics, on the other side, it's not only give the solution, it try to reduce the smokers number. Not only it does that, with that it gives the value judgment that smoking is not good for the health, we should stop that. So it is passing the judgment. So this is done by normative economics. So normative economics, maximum time it is compared with macroeconomics. Microeconomics always finds what is the problem, what is the consequences, causes and the consequences, and the solution will be given by the macroeconomics and judgment will be passed by macroeconomics. So normative economics and positive economics, both are very important for the business economic analysis. But maximum time, we say that the business economics, its maximum time, it dependent on normative economics. In nature, business economics, it is normative. But yes, normative economics also dependent on the positive economics. So both are dependent on each other, but business economics, its maximum, it is dependent on normative economics. So I hope you understood all the 8 points. Thank you so much. If you really liked my video, please subscribe and share. Thank you.